Welcome back, everybody, to Keys and Gears.
Here we are.
Yes. So, what are we talking about today, Bess?
And you are Mark, and I am
I'm
Bess.
exactly sorry, Mark, Bess. I assume you keep watching, so
That's
you
right.
already know our
Loan
names.
officer extraordinaire,
Thank you.
full-time real estate professional here.
Yes.
All right. So, Mark, lender extraordinaire.
Okay. That sounds ominous. Okay.
Right?
Okay. What?
I want to chat with you today.
Okay.
One of the challenges you and I both experience on the regular, or at least we're both high alert of, and that is after you and I have, and what it's a team, after we have snagged for our buyers their one, and they're under contract with terms to purchase the home that they're happy and excited about. And with that excitement, they're building momentum towards the day they get keys. And in Texas, the refrigerator and the washer and dryer are personal property, so there's no guarantee the refrigerator, washer, dryer, and usually that's covered in negotiations. I digress.
Right.
But there are some major purchases to really enjoy your home that have to be made. What happens if they make those purchases before they get keys?
Ooh, that can spell trouble. Capital T. So, as a lender, my job is to verify income, verify assets, meaning cash to close, and verify your credit. Okay. So if you purchased a bunch of furniture and appliances with your cash, and
Right.
now you don't have enough cash for closing, that's one problem to have, right? The other problem is if you open a new line of credit, meaning you bought the furniture with a new credit card or with a store credit card or with store financing, like
Even in store financing.
like
Because a lot of people just
Nebraska
think that's
Furniture Mart.
no big deal.
It's all showing up on your credit, right? Um, if you put it on your credit card and now your minimum payment has gone up, lenders will check your credit periodically throughout the process from start to finish
Okay.
to make sure that before they give you the final okay, that you haven't done anything silly to affect your credit, to affect your ability to purchase the home, such as if your minimum payment, debt payments go up, there's something called the debt to income ratio.
DTI, is that what I've heard?
DTI is the abbreviation for it. And if your debt to income ratio is too high, meaning your debts versus your income, if you have $5,000 income and you have $2,500 in all your debt payments, your credit cards, your new house payment, your car payments, everything combined is $2,500, and you make $5,000 gross every month, then your debt to income ratio is 50%. And that's too high, for example. So if you purchase things and all of a sudden you owe more money, that means your debt to income ratio has just gone up. And if you're a first-time home buyer, especially, a lot of times your debt to income ratio is pretty tight.
To begin
So
with.
you got to be very careful. But even the wealthier clients, my very first real estate closing when I was still a real estate agent, my very first closing, the lady thought she had just gotten divorced, and she thought it would be a good idea to buy herself a new car. And she did it like 3 days before closing,
No.
thinking that nobody would find out.
Because it's just 3 days, 72
3
hours.
days.
What could happen in 72 hours?
And this was a wealthy individual. She actually bought herself a Porsche. So it wasn't a cheap purchase.
No.
It was like her dream car. She was getting her dream house, and now she wanted her dream car. She couldn't wait. So ever since that day, my email, at the bottom of my email, it says, do not make any purchases without checking with me first. Any major purchases that affect your credit, open new lines of credit, big no-no. The other one, I digress, as a sidebar, change to your income. Can't tell you how many times people say, oh, I just changed jobs in the middle of the whole home purchase. I mean, it's
You've been at that job this long. Just wait another 30 days. You can make it 30 more days.
If you get fired, that's
fair enough.
That's nobody can control that. But anyway, back to the stay away from purchasing things. Wait until after closing to purchase all these things. because you also don't want to have the underwriter redo the whole thing and
Right.
rework it and add extra work. Even if you can afford the extra payments and everything, just don't do it because it stops the process and it can delay closing because now the underwriter has to re-underwrite the whole loan because you've made changes to your credit. So be very careful. Now, if you're paying off credit cards, paying more because you have the money and you want to pay them down, be my guest. That doesn't affect you. That doesn't affect the home purchase. But if you're adding credit, if you're adding debt to your bottom line, to your balance sheet, so to speak, then that can be a problem.
May I ask you a question to
Yep.
clarify? But if you're emptying out your reserves to pay off those credit cards,
So
that could have
it
could affect it.
could because some loans do require you to have a certain amount of reserves. Most loans don't. As long as you have enough money for closing,
And
meaning-
also paying off those credit cards. I
Right,
guess that's the point.
right,
Is it-
right. You got to set aside the money for closing. Down payment and closing costs combined. That's the money you absolutely have to have.
Mhm.
Now, if you have a certain type of loan, then the lender will also look at, do you have enough reserves on top of that to pay your new mortgage for 6 months, for example?
Oh, interesting.
That typically comes into play in other not plain Jane vanilla mortgages are not affected by that as much as, specialty programs, so to speak. So that, emptying out your bank account, check with me first. Just give me a call. Just let me know. I'm thinking about doing this.
And you were talking about purchases. One, there's other kinds of purchases besides need-based purchases. I need a new sofa for my living
Right.
room, or I need a washer and dryer. But we had one together where the transmission of their college car
Yes. Yes.
decided to quit
Yes.
and die in the
Yes.
middle of
Yes.
the process. And they did have two cars, married couple, and
First time home buyer.
first time home buyers. And before they and since you and I had both been
They listen.
trying our best to scare the daylights out of them,
They listen.
they did call and just say basically that we just got phone with the mechanic and this is what it's going to be. And your advice to them was like, commute together
right.
until you have keys.
After closing. Yep.
Like figure out how to make
Yep.
it work until you have keys.
Yep. Unfortunately, in their case, that was the only option they had. The other thing I do see happen sometimes is co-signing a loan. So where
Yes, tell us more.
parents are co-signing for the kids, for example, in the middle of buying their own home, their cousin or their best friend can't afford the house, the car payment, so they're co-signing on their behalf, thinking it's not really affecting their credit. Yeah, it does. Anytime you co-sign a loan, that loan, the lender acts as if you were the only one paying.
No kidding.
Unless you can prove that the other party that you co-signed for has been making payments for 12 consecutive months with
Without your help.
canceled checks, with all that, to really, it can't be a Venmo payment. It has to be canceled checks showing that they have made payments on that debt before the lender will take it off your debt to income ratio. So when you, in the process, certainly do not co-sign anything. But even if you're co-signing outside and you're not currently purchasing a home, just understand that it is affecting your credit. And it will also affect your credit if that goes into, if the car gets repossessed, because you're equally responsible for that payment.
And when you say affecting credit, circling back around to the beginning, you're saying it could nudge you from 43% DTI, debt to income
Right.
ratio, to 50.
Right. Or
Right.
47.
And you're
or,
like, wait a minute.
Yes,
Didn't think it would affect it that
Right.
many points because it is only a cosign.
correct.
Got it.
So be very careful. Just check with me first anytime you make thinking about doing anything. When you're in the process of purchasing a home, just check with me 1st. Let's see how it affects you.
My summary on that, besides 911 Mark,
Yeah.
if you have any spending questions,
Right.
is practice just living under a rock.
Yeah.
Just pretend
good
you're
way to
living
put it.
under a rock,
Good way to put it.
which sounds a little stark, but it's, again, we've all lived this, right? Short-term pain for long-term gain. That's really what it boils down to.
Save up more money. Don't spend it.
Don't spend it.
It's actually a good thing. So, yeah. All
Well,
right.
let's talk about a good thing.
Yes, let's
the
talk about a great
picture
thing.
of the day.
Oh my, what is this?
Right? Okay, so this was a recently flipped house.
Okay.
And it has been sitting on the market for quite some time. It has been, insert air quotes here, staged.
Okay.
Lots of things. The Pillow Palooza, I thought was really,
Yeah.
it was
On
really
the
kind of
fireplace,
funsy.
yeah.
I did think it was an interesting solution they did with the TV. They mounted it. This was a home built in the 70s.
Yeah.
And many of these homes built in the 70s have the raised hearth.
Yes.
And they have generally the hearth wall goes an entire, not unusual, goes entire wall. They did beef up the mantle with a new piece of cedar to do the farmhouse thing.
Look, yeah.
What's interesting is also, I wanted to the illustration. The floor is 20-inch faux travertine tile, and you can see the little inset transition between the living room and the dining room, and it's got that little
Pattern.
funky. That is all from like a 2000
Yeah, it looks
remodel.
Like it. Yeah.
Okay.
Early 2000, yeah.
When Browns and Under the Tuscan Sun was like the hot movie and romance. Okay. We all remember this in that skip mud trowel finish. That's another conversation.
Yes.
Anyway, and so why this? Okay. Agent asked, after I saw this home, the agent asked if we were bringing any offers. My buyer's reaction was, there's a lot of work here to do. And this home, because it's been flipped, they were asking top dollar for the neighborhood. The agent was stupefied that my buyers thought there was still a lot of work to do. I suspect buyers buy emotionally. I think emotionally in their head, or even subliminally in their head, the brown 2000 floor didn't jive, was incongruent with
updated current,
with the white, fresh, modern farmhouse-ish.
It's not. Well, it's
deal.
not. It just isn't. So, I mean,
right. So this is a design mashup, and something to keep in mind. We are going into spring, where a lot of people start thinking about refreshing their home. When you were thinking about just here's the number one rule: be consistent, be congruent. Be congruent with your overall design choices, but also congruent with your home architecture.
Yeah.
That may be another thing to talk about. But anyway, so there you go. So here's a flip that kind of failed.
Yeah.
In my humble opinion.
And really, in my humble opinion, you should, anytime you want to make a change to your home, call somebody like Bess, because you see the homes and you see how this could even subconsciously confuse a home buyer, right? A lot of times the home buyers can't really, and you know this, and we know this, they can't put their finger on why they don't like a house.
It's just off.
It's just off. And subconsciously, their brain is processing all the information, and they're looking at the floor, they're looking at the ceiling, they're looking at the fixtures, and they're looking at the farmhouse look, and they're like, none of this matches. So it's confusing me. I don't like it.
Right?
You know,
we could even deep dive slightly more. I mean, there is the token postage stamp rug. I would have gone with no rug.
Right.
If I was staging this home, no rug. Don't, if you're not gonna be all in,
if you're not gonna stage it, then don't stage it.
Just don't. Yeah, I think this home would be a lot better off with nothing in it if they're not gonna do it. I mean, although the Pillow Palooza, kind of cute, but
if you have your house on the market and you're not getting any offers, maybe you need to change agents. I can say that because I'm not an agent. So just hint.
There's just something amiss. That's part of condition, maybe.
Right. It is. You got to adjust the price at the very least.
There's also condition as in, the marketing condition, that sort of thing.
Absolutely. Anyway, we could go on and on about this. Oh my gosh.
This is the pod.
Yes.
Right, for
all right.
Love
Thanks
you,
for joining us. See you next time.
Absolutely.
Bye.